Okay, I'm gonna try to make this fast so it uploads. This is our last section in accounting. It ties everything together and it closes out our last step in the accounting cycle. We have did everything, right? Hooray. So you know how to get through the accounting cycle. The last thing we have to do is just close out, prepare a post-closing trial balance. All of our accounts are closed out, right? We closed out all these accounts in the last section on our income statement. We brought them to zero. They're closed out. They're ready for a new fiscal period. So the only accounts that we have left are our balance sheet, accounts, which are our assets, our liabilities, and our capital accounts. So all we're doing in 16.5 is closing those out. So you write what it is. Your post-closing trial balance has to equal. So the post-closing trial balance, it lists all of your balance sheet accounts and it goes in order of what they are in the chart of accounts. So all you need to do, we know that our cash, our normal balance for our cash is a debit, right? Accounts receivable, our normal accounts receivable. Remember, at the beginning of the year, we did our normal balance, like cash, it was a debit. And then our liabilities, stuff like that, our unemployment, Medicare, all that is a credit, right? Their normal balance, that's a credit. Okay, the debit amounts you list them first. The credit amounts, you list them second. So after the adjusting and closing, after these have been made and posted, it should equal down at the bottom, just like everything, it should balance out. So we have our asset, our liability, and our capital accounts, because those are our balance sheet accounts on here. Okay, and it gives you what you're gonna use. So you're just gonna take these numbers and you're gonna post them and close them out. So our cash, 2810, we're just gonna list it first and we're gonna close it out, right? This is how we're posting these or closing these, and then we're ready for the new fiscal period. This is the last step in the accounting cycle. We don't need to use anything previous because they give us the amounts we're using. Petty cash, $350. Petty cash, $350. Same thing for on our own. They're gonna tell you what you need to use, so you don't need anything previous. They're getting these from their balance sheet, right? Because these are the balance sheet accounts, except your retained earnings, capital stock, that comes from our stockholder equity sheet, which we did in 16.2, I believe, or 1. So then it's giving it to you, and you just come over here and you post them in order. Debits first, credits second, okay? And then they should equal. So these are the accounts because these are the only accounts that they're giving you. And if you need to follow to know what order, okay, you just follow this. If there's no petty cash, then we skip down to the next one, merchandise inventory. So that's next, right? And then you're closed out. Okay, guys, I hope that you understand now everything in the accounting cycle. And that is the very last step. Please finish all the 16 sections and chapter 16 tests, no chapter 16 study guide, and send it in, please. Thank you. Have a good day.